This is the World Financial Podcast with Harold Siegel. My name is Randy Marshall. Joining us is our financial and diamond expert, Harold Siegel. You can connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com, or HESradio.com. You can speak anytime with Harold, personally and privately, 1-800-432-1022. And this is week number 3 for our podcast. And get our free weekly newsletter. If you do not get our newsletter, now is the time. We have a newsletter that is packed full of just outstanding information this week. We have info on a painting that sold for $450 million. There were diamond auctions in Geneva, Switzerland. We have auction results. All of that is coming up on today's podcast. Now, as we start today's program, the U.S. dollar is at 93.89, Canadian dollar 78.45, gold at 12.79.80, silver 17.14, gold-silver ratio still at 75, platinum 9.37, palladium 9.92. Bitcoin had a very tumultuous week where it was up heavy and then down very, very hard. And at this point, it can't be a store of value if it's that volatile. Bitcoin in Canadian dollars, 94.42.33, US 74.05.55, WTI 55.19, and Brent crude 61.59. But one of the big stories of the week, rare Leo da Vinci painting. Leonardo da Vinci painting sells for $450 million, almost $500 million. A painting of Christ by the Renaissance master Da Vinci sold for 380 million euros Wednesday, that is 450 million US. The painting called Salvator Mundi, the Italian for Savior of the World, is one of fewer than 20 paintings by Leonardo known to exist and only one in private hands. Now, the 26-inch tall, 66-centimeter tall painting dates from around 1500 and shows Christ dressed in Renaissance-style robes, his right hand raised in blessing as his left hand holds a crystal sphere. Its path from Leonardo's workshop to the auction block at Christie's was not smooth. Once owned by King Charles I of England, it disappeared from view until 1900, when it resurfaced and was acquired by a British collector. Now, at that time, it was attributed to a Leonardo disciple rather than the master himself. The painting was sold again in 1958 and then acquired in 2005, badly damaged and partly painted over. But of course, a consortium of art dealers who paid less than $10,000, 8,445 euros, picked it up. Now, the art dealers restored the painting and documented its authenticity as a work of Leonardo. The painting was sold Wednesday by Russian billionaire Dmitry Rybolovlev, and he picked it up in 2013 for 127.5 million, 108 million euros. And in a private sale that became subject of a lawsuit. But it was sold, Harold, for $450 million at auction.
Absolutely unbelievable. And by the way, 50 million of that was commission. Not too shabby for a sale that took all of a couple minutes. So just goes to show you, the strength of the alternative asset market. These type of returns could never, ever be found in anything else but hard assets, artwork, diamonds, collectibles that have tremendous value to them. The beautiful thing about bringing auction results, it lets us live vicariously through the filthy rich. To see a painting that small sell for $450 million and that somebody would have paid a $50 million commission to acquire this is just unbelievable. But it's a phenomenal thing. And again, it's a great indication as to the business that we're in, which is the alternative asset market. We don't sell stocks or bonds or commodities or anything. What we do offer is alternative assets with our major focus on rare colored diamonds. Diamonds have done extremely well over time and will continue to do so because of their rarity. Now, we deal primarily in rare color diamonds, and basically only one diamond out of every 100,000 diamonds that are mined turns out to be colored. And just because a diamond turns out to be colored does not mean that it's a collectible diamond. So you really have to know what you're doing in this part of the business. But again, Randy, it's just great to see that somebody paid $450 million for a painting. And if you're smart enough to accumulate 450 million, and let's face it, somebody who can spend that kind of money is a multi-billionaire. But to think that he would take $500 million and invest it into this painting only speaks so well of the alternative asset market. So again, we're very pleased to read those results, and there were some auctions that again went on this week, which were phenomenal. This week again in the markets, we follow the hard asset markets closely, and gold is certainly one of the markets that we have recommended over time and still do recommend as a hedge against bad things happening in the economy. And let's face it, there's a lot of things out there at this point that could be very severe and very dangerous as far as investments go. Myself personally, I'm not a stock trader, and I've always learned that when stocks are this high in an economy that is this rough, you don't want to be buying into the market at these levels. You wait for a pullback. But unfortunately, the general public always feels that they're missing out on a money-making opportunity and jumps into these markets without really thinking about it. The same has been said for real estate, but mostly in the stock market. And there's a lot of analysts out there at this point that are very concerned about the market at this height because, the Dow has really rallied up to 23, almost 24,000. And it's not that things are getting great in the United States. Other countries are in big trouble. Their investment markets are not doing well. So it only makes sense that that money would come into the U.S., into the Dow. And that's one of the reasons that the Dow is moving higher, more buyers than sellers. But it doesn't mean that there's bullish sentiment in the market at this time. There's just way too many problems out there. And again, a market that really depends on just a few stocks is not a sound market. So if you are trading the stock market, I'd be very, very cautious at this point. Meanwhile, you have gold trading at 1281. It's up 280 on the day. Gold is trading in a range right now. We've traded gold since 2000. We traded gold when it started at $250 and rode it all the way up to $1,900. And after they destroyed the gold market by raising margin requirements so heavily for that 1 week period of time, it basically has dropped gold from 1,900 down to 1,050, and gold has been trading between really 1,100 and 1,300 for the past 4 to 5 years. So it's difficult to recommend gold as a screaming buy at this particular point, but we do recommend gold as a hedge against inflation and against currency devaluations and against other geopolitical situations that could materialize. Now, we all know that President Trump just came back from a trip to Asia. He's very bullish on his trip, but, you really can't trust this guy. And the bottom line is that a lot of the rhetoric that is coming out of Asia has to do with North Korea. So again, North Korea is a loose cannon. President Trump doesn't back down from any type of conflict or anything like that. So it is possible that there could be some action in the gold market due to the fact that we're still talking war with North Korea. But again, it would be a real stretch for that to happen. I highly doubt that we're going to see North Korea do something so stupid than to start a war against the U.S. and its allies. So again, at this particular point, I continue to see gold trading in a range. Same thing with silver. Silver's trading right now at 1718, but it's trading really between $16.50 and $18. Palladium has overtaken platinum, I believe, for only the second time in history. And that's a big deal because at this particular point with platinum trading at $935 and palladium trading at $987, that's mostly to do with the catalytic converter industry. At one time, palladium was at 11 or 12 or 1300, And I'm sorry, platinum was at 11, 12, 1300, and palladium, when we first recommended it, was at $180. So palladium has gone from 180 all the way up to over $1,000 at one point, and platinum has basically been trending lower. So there's no advantage any longer in the catalytic converter industry because platinum and palladium are basically at the same price. The market that I am looking at and bullish on is the US dollar. US dollar right now is trading at about 94 cents. When Donald Trump came into office, the US dollar was trading at around 96 to 98 cents against a basket of foreign currencies. Once he got in, and we were sort of bullish and excited, thinking that this guy was going to do a good job and get the economy back on track and jobs and business and closing deals and all that. Well, based on that, the US dollar skyrocketed and went all the way to 103 and was on its way to 108 to 110 till he started not coming through with his campaign promises and was just a real loose cannon. Well, then the US dollar dropped all the way down to 91, 92 cents. So that's a good indication that there was not a lot of confidence in the US and the US president. However, the Dow was still hitting record prices. So what it tells me is that no matter what happens, the US stock market, aside from corrections here and there, is the strong market. But you have to know which stocks to trade. Because the fact is, if it wasn't for Google and Amazon and those type of companies, the Dow really would not be at the level that it's at. So I see the U.S. dollar going back up. I see the U.S. dollar gaining strength. And if President Trump does actually accomplish anything, and the U.S. economy does strengthen, then I anticipate that the U.S. dollar will not only break par, attempt to break the 103 level, but I do see that if we do get into a bullish factor, that we are going to see the U.S. dollar as the strongest currency, and our clients will make a lot of money off of the U.S. dollar. So again, at this point, Randy, I see most of the commodity markets really trading in a range at this point, gold and silver especially. I do like the U.S. dollar, and I like it against the Canadian dollar and against the eventually the euro. So that's what's happening in the markets at this time. I would only buy gold as a hedge against geopolitical problems. Right now, it would take a lot for gold to break out of the doldrums and the range that it's been trading in between 11 and 1300.
Connect with Harold at 1-800-432-1022. 1-800-432-1022. You can speak with him personally and privately. Any questions you have about the financial markets, learn about the financial programs that he has available to you, recommendations that he's making. He'll be happy to speak with you anytime. 1-800-432-1022. His website, rarecoloreddiamonds.com, also hsfineauctions.com. There's an auction underway there right now. We'll talk about that a little later in the program. Get our free weekly newsletter. It's the companion to the radio show. The stories we talk about are in the newsletter. You can go through it in 5 minutes or spend hours. It's really up to you. We've done it in a way where we keep you up to date on a weekly basis, along with the radio show, and we encourage you to get your name on the list. We send it out via email free of charge. One of the things that we've spoken about for quite some time is Bill C-15 for those in Canada, and that is the bail-in provision in this bill where banks, if you're in a bank and it goes bankrupt, you will not be covered. You're going to be bailing in and helping out the bank. Now, there is an interesting story this week. Bank rescue plan may squeeze a corner of the Canadian bond market. New rules to protect taxpayers from bank failures may push investors out of a 95 Canadian billion, 75 billion US corner of Canada's corporate bond market, reducing liquidity and raising borrowing costs under a regime set to take effect in 2018. A short-term bank deposit note, typically sold to institutional investors, will gradually be replaced by what they call senior bail-in debt that can be converted to equity in the event of a bank failure. The new instruments may be off limits to money market investors who aren't allowed to hold securities that risk being converted to equity, some analysts and money managers say. Now, the changes could cause friction in the $310 billion money market in Canada that greases the wheels of corporate finance. Short-term investors scoop up deposit notes with less than a year left to maturity as longer-term investors sell. That helps keep the market liquid, allowing banks to borrow at low rates and offers investors access to safe bonds that yield more than short-term government debt. We don't know what they basically say here. We don't know if there is going to be an impact to bank funding costs because there is not a wall of money buying the money market instruments at the 1 year mark, according to Chris Summers, a credit analyst at Bank of Montreal who follows Canadian banks. Now, the federal government in Canada and the bank regulator are expected to release final guidelines for the bail-in regime before the end of the year, including how much debt and capital banks will have to hold to satisfy their total loss-absorbing capital requirements, capacity requirements, also known as TLAC ratio. The framework is part of a global effort to prevent a repeat of the 2008 financial crisis, which saw taxpayers fund massive bailouts of banks. The potential wrinkle for Canadian money market investors is due to an interpretation of the existing security laws. But this is something, Harold, we've talked about for quite some time here in Canada. People need to be aware of Bill C-15. It was interesting. Someone I know went to their bank and asked the bank manager, what is your bank doing about bail-ins and Bill C-15? The bank manager knew nothing about it. So that is very worrying when you're walking into your bank and this man running the branch does not know anything about bail-ins, bailouts, what's happening in Canada here, obviously taking effect in 2018. Very concerning to say the least. And what are your thoughts?
My thoughts and has always been, that it's obvious that the government doesn't give a damn about Canadians, citizens at all, because it makes absolutely no sense to accept bail-ins. Because all it tells and sends a message to everybody is that if those banks go under, and with the present state of the Canadian economy, believe me, it's not impossible, that they don't care to back the Canadian consumer. So as far as I'm concerned, I thought it was a huge mistake. We were appalled by it when it happened, but we followed the entire procedure. We saw what happened in 2008 when the U.S. bailed out their own banks and corporations and did the right thing and righted the ship with the U.S. economy. Then we saw what happened in Cyprus when they went the opposite route and accepted the bail-in structure and how it destroyed the bank in Cyprus. And all the people ended up with was worthless paper shares in the bank. Well, now the Canadian government is doing the exact same thing. Here, we're not going to back our own banks. If the bank goes under, yes, we can take your money. However, we're going to give you equity in that bank. Well, how stupid do they think that everybody is? Who would ever want to own equity in a bank that's going under, that can't pay their bills and hasn't run the bank properly? So it doesn't shock me in any way, shape, or form that the manager of the bank did not understand or know about bail-ins, because it was hidden in that C-15 bill. We were the ones that found it. We were the ones, and it was actually one of my clients in Alberta that called me up and said that he had read something but wasn't 100% sure what it meant. Would I take a look at it? And that's how we discovered it. It was hidden with all the new marijuana laws and other things that were involved in that C-15. But again, Randy and I were appalled by this because we were appalled when it happened in Cyprus. And the fact is that all the bank models are very similar. And I think what happened in Cyprus was they used it as a guinea pig type of situation where they closed the bank, people could not get to their money, you could not get to ATMs. It was a really horrible situation. People were in a total panic mode. and they closed the bank. And when they finally opened it, you were only allowed to take, I think 100 euros out of the bank, which didn't do any good to anybody. And then they lowered the boom saying that, as creditors of the bank, we took that money to pay the debts of the bank and gave the creditors, which were the depositors, shares in that bank. And that's exactly the plan that the Canadian government decided to adapt. And I'm just absolutely shocked and appalled that they would do something like that. But then again, the Canadian government raised interest rates at a time when the real estate market is in trouble, and when the Canadian consumer has the highest debt level in history. So what do we do to reward the Canadian consumer? Yeah, let's raise interest rates. This way their mortgages cost more, and to carry their debt on their credit card debt and everything else costs more. So what in the world is the Canadian government doing for the hardworking Canadian consumer? He's screwing them. That's all he's doing. There's no way in the world that by raising interest rates or allowing bail-ins is to the advantage of the Canadian consumer. So again, my opinion is it's just a horrible situation. And if I had my money in Canadian banks, understand that you're only insured up to $100,000. So either start looking at credit unions, which are much more friendly and are not in the bail-in program, or do not keep more than $100,000, which is what the Canadian, insurance depository limit is. You got $100,000 worth of insurance on your account, meaning that if you've got $500,000 sitting cash in the bank and that bank goes under, you're getting back $100,000 and losing $400,000. I would suggest at this particular point that you look at your situation and do not keep more than $100,000 in any given bank, and possibly look to the Canadian credit unions as a salvation situation, as opposed to putting yourself in jeopardy with the bank.
If you'd like to learn more about Bill C-15, what it means for you as a Canadian investor or even a worldwide investor, connect with Harold at 1-800-432-1022. RareColoredDiamonds.com is the website, 1-800-432-1022. And definitely get our free weekly newsletter. You can read that story in our newsletter. Harold will be happy to send it out to you. RareColoredDiamonds.com is the website, and we had two very big auctions during the week. We had Christie's Magnificent Jewels Auction, November 14, 2017, Geneva, Switzerland. We have the auction results in our free weekly newsletter. We also have Sotheby's Magnificent Jewels and Noble Jewels Auction, November 15, 2017, Geneva, Switzerland. And it really was the tale of two very different auctions. We had the first auction doing very well. Christie's did very well. And unfortunately, the top three lots for Sotheby's did not go. They did not sell. But let's give you an example of what happened for Christie's. It was actually a sale that usually does very, very well for both companies. The Geneva auctions are very, very popular. And it's one of those auctions that people talk about because they bring out the big, big artillery. And that is the greatest pieces of jewelry and diamonds the world has ever seen. Now, a flawless 163-carat clear diamond, and that's a D, fetched about $34 million at Christie's in Geneva on Tuesday. The diamond, a centerpiece of a symmetrical gem-studded necklace designed by Fozzi Grossi, founder of the Geneva jeweler Di Grosnoso, and that exceeded the auction house's expectation of $25 million. The stone was the largest of its kind ever auctioned. A team of 10 specialists in New York cut the gem from a rough 404-carat stone discovered last year in Angola. Now, that's the biggest diamond ever found in that country. The necklace is made of 18 diamonds on one side and 2 rows of pear-shaped emeralds on the other. It took more than 1,700 hours to create. It went for $34 million. There was not an estimate on that. Now, Sotheby's holds the record for the most expensive diamond ever auctioned, having sold the 59.6 carat pink star for $71 million in Hong Kong to jewelry retailer Chow Tai Fook. Another highlight of Tuesday's auction, a large pink diamond, one set in crowns of numerous French kings and emperors, including Napoleon, sold for, and the estimate on it was 5.3 to 6.6 million. It ended up selling for $14.4 million, and it was under the hammer to an unidentified telephone bidder. The gem was named after Cardinal Mazarin, and we've talked about this diamond before on our show, an Italian cardinal and diplomat, as well as a great art collector who served as chief minister under Louis XIII and Louis XIV, and he bequeathed it and other diamonds to the Sun King in his will. The pink stone, originally dug out of the ancient mines of Golconda in south-central India, sparkled on the crowns of Louis XV and XVI, who was guillotined during the French Revolution, and it graced the crown of Napoleon I, III, and Empress Eugenie, among others. So you can see the provenance on this thing is off the charts. It has since passed through the hands of famous French jeweler Frederic Boucheron and Baron Von Duries. Christie said the seller was a private collector but did not reveal their identity. Tuesday's sale marked the first time the diamond appeared at auction in 130 years. It has been auctioned off before. It was among the French crown jewels that sold off in 1887, 17 years after France's Second Empire collapsed, and Napoleon III and his wife, Empress Eugenie, sought exile in England, leaving the jewels behind. But Harold, let's just first talk about the Geneva sale that did very, very well on Tuesday with Christie's. And we had this stunning, just absolutely gorgeous necklace. And then on top of it, we had the Cardinal Mazarin pink diamond go for a very, very nice price.
And the fact is that when fancy light pinks, I mean, we've seen the fancy vivids, which is the highest saturation of color, sell for millions and millions of dollars a carat. As far as pinks go, I think the record is close to $4 million a carat, and we think that's going to go substantially higher. But that's on the highest color grade, which is fancy vivid. Under that is fancy deep, fancy intense, fancy pink, and then fancy light pink. So fancy light is actually on the lower end of the color scale, and those diamonds set records at auction, selling for over $500,000 a carat. So again, just like the painting that we discussed at the beginning of the show that sold for $450 million, investors that spend that kind of money on a hard asset like a diamond or an art piece, they're not doing it to lose money. They've done their homework. They know what the value is, and if they're getting value by buying it, and obviously these investors did. So I'm just incredibly ecstatic at the prices that these diamonds are hitting at auction, because again, this is an investment that we brought to our clients, more than 10 years ago. Nobody even knew about colored diamonds back then. And now look what's happening. I remember back in 2005, we were reading auction results for some vivid blue diamonds that were selling for $200,000 to $300,000 a carat. Do you realize that those diamonds now, 13 years later, are selling for $4 to $5 million a carat, and we see no end in sight for high quality blue diamonds. I mean, very seldom does one ever become available for sale, but when it does, they're so rare that they've really become more rare than red diamonds, which were the rarest of all diamonds. Because the Argyle mine is about to close in a couple of years, and most of the pink diamonds in the world will be gone, we anticipate over the next 4 to 5 years that the price of pink diamonds will continue to climb substantially. And I know many of my clients own smaller pink Argyle diamonds. We believe that we're going to do very, very well with those diamonds at auction.
And before the show is up here today, we will talk about the pink Argyle diamond tender. We do have some info on that finally. It was interesting. About 2 weeks ago, I sent them an email, and this was through their Rio Tinto website to their people that handle media. Never got a response back, which is actually very poor on their behalf that they don't respond to people that are emailing them. And lo and behold, here, about 2 weeks later, we did finally get a press release from Argyle, and we'll talk about it momentarily. So Sotheby's, they had their Magnificent Jewels and Noble Jewels auction on November 15th. Let's get the good news in here first. 33 carat fancy light pink fetched a world record of $12.8 million. A 33.63 carat fancy light sold for $12.8 million, setting a new world record for a fancy light pink sold at auction by Sotheby's. And that was in Geneva. The gem was mounted on a ring by Harry Winston around 1970, according to the auction house. The diamond was the top lot of the evening, and among the stars of the Noble Jewels section of the auction held at the Mandarin Oriental, Geneva. It sold within its estimate of 8 to 14 million. The previous record price for a fancy light pink diamond was $7.5 million for a 40.3 carat VVS2 pear-shaped diamond, which was sold at Sotheby's Geneva in November 2016. But we did have a world record that night. But this is where it gets a little strange, because beyond that, it was a rough night for the diamonds that were brought forth by Sotheby's, and they had some beautiful winner diamonds there. They were definitely hero diamonds. It's perplexing why they did not go under the hammer and sell, because they are world class. Now, one of them was the Raj Pink. It did not sell. You also had the Von Donnersmarck diamonds, a pair of yellow diamonds. They did not sell. And we also had a blue diamond that did not sell. And Harold, it almost seems like when you get towards the end of a sale and you have one that doesn't go, everybody gets spooked. Even though we had this record price for the fancy light pink diamond, everyone was spooked off the others, but still they are outstanding diamonds.
That is very true. And, in a lot of these cases, if they don't sell, they do get contact. The auction house does get contacted privately to see if they could work out a deal to sell the diamond privately. So, again, it is a bit of a mystery, because the diamonds that didn't sell were diamonds that should have sold. They were like the stars of the auction. So, again, when you look at the statistics of, I believe, the major auction houses, they don't sell 50% of the pieces that are up for auction. So the fact is that not every piece sells, and at this particular time, those pieces just didn't sell. But it wouldn't shock me to know that those diamonds would sell privately right afterwards. In fact, there's a very good chance that they will.
One of the things we want to pass on to everyone listening today, we do have in our free weekly newsletter auction results, and we'll be happy to send them to you. Connect with Harold at 1-800-432-1022. And before we end our show today, I definitely want to talk about Argyle Pink Diamonds and the tender. Now, finally, we did have information that came out. The 2017 Argyle Pink Diamond Tender, a collection of 58 rare pink, red, and violet diamonds from its Argyle mine, was delivering, no surprise here, a record result, reflecting strong global demand for such rare diamonds. The tender continued its trajectory of double-digit price growth. You heard right, double-digit price growth, with the Argyle Everglow becoming the most valuable diamond in the tender's 33-year history. Known as custodians of rare beauty, the collection of 58 pink, red, and blue diamonds were highly sought after, with the winners comprising collectors and connoisseurs and luxury jewelers from 11 countries spread in Asia, Europe, Middle East, North America, and Oceania. The 2.11 carat Argyle Everglow, the largest fancy red diamond presented at the tender, was picked up by Optimum Diamonds, based out of New York City. And they also acquired Argyle Liberté, an exceptional rare 0.91 carat violet diamond, the largest pink diamond in the collection. A 2.42 carat cushion-shaped Argyle Aveline was sold to the international luxury jewelry house Graff, obviously Lawrence Graff, known for creating the world's most extraordinary pink diamond jewelry. But Tinto Copper and Diamond Sales and Marketing Vice President Alan Churgwin said, "The market fundamentals for pink diamonds strong. For a product that is both limited and finite, it continues to get strong support and significant value appreciation." And obviously the Argyle mine, as we know, is going to be shutting down. And they produce 90 to 95% of the world's pink diamonds. And the tender is now done for another year. And it's impressive to hear, Harold, though, the tender continued its trajectory of double-digit price growth and becoming this Argyle Everglow the most valuable diamond in the tender's 33-year history. Very exciting.
Very exciting is true. Absolutely thrilling. And when you look at the size of these diamonds, you know why they're considered the most concentrated form of wealth on earth. You're talking in most cases, diamonds that are under a carat or around a half a carat. In fact, with the Argyle mine, 95% of the diamonds that come out of the mine are under a quarter carat. So fact is that it's a phenomenal time to be in the pink diamond market. We believe that the market is going to continue to move substantially higher. And when the mine closes by 2020, I think that this will prove to be one of the best investments that we've made.
Learn more about investing in hard assets, including pink diamonds, through rarecoloreddiamonds.com. Rarecoloreddiamonds.com, 1-800-432-1022. The website, rarecoloreddiamonds.com. Harold has an auction underway right now at hsfineauctions.com. Go there, sign up. You can bid on the items that are in the auction right now. Go to hsfineauctions.com or take a look around at the museum pieces that Rare Colored Diamonds has, rarecoloreddiamonds.com, 1-800-432-1022. And Harold, in closing, what a week it was. A painting, $450 million. Unbelievable.
With $50 million in commish. So not too shabby. Great to see, Randy. Just absolutely great to see. It's got to give, investors out there that are involved in the hard asset market, I think that they should be excited as we are, realizing that all these situations are happening that are so positive.
Well, thank you, Harold, for your knowledge and another great show. We should remind people that next week on Thursday, it is U.S. Thanksgiving, and Harold and I will be taping a show for you. We never want to miss a week, and we have a newsletter out every week, so we stay connected with you. Connect with us at rarecoloreddiamonds.com, 1-800-432-1022, hsfineauctions.com. And if you'd like to learn more about investing in hard assets, connect with Harold, 1-800-432-1022. So thank you very much, Harold Siegel.
It's my pleasure. I wish everybody a wonderful weekend and a very profitable day.
That's it. Another edition of the World Financial Podcast with Harold Siegel. My name is Randy Marshall. We will talk to you next week.